If you have any overseas link, bank account, shares, property, even dividends, this update is important. The Income Tax Department has flagged 25,000 taxpayers as high risk for possible non-disclosure of foreign assets or income in their ITR. And if you have received an SMS or email from the department, don't ignore it, because there's a deadline. From 28th of November, taxpayers have started getting advisories for assessment year 25-26, asking them to review and correct their returns. The window to do that voluntarily is open till 31st of December 2025. Now the obvious question, how did they identify these cases? Because India now receives overseas financial information through global data sharing systems. The department is matching that overseas data with what taxpayers declared in their ITR, especially in Schedule FA and Schedule FSI. And wherever they see gaps, cases are being flagged. And this isn't the first time they have done a nudge drive. There's a clear pattern here. Last year, 24,700 taxpayers voluntarily revised disclosures and reported 29,208 crore worth of foreign assets and 1,089.88 crore in overseas income. And till June 2025, assessments in about 1,080 cases resulted in tax demands of nearly 40,000 crore. So what happens if you don't act and the case moves beyond a nudge into enforcement? The consequences can be serious under the Black Money Act 2015. That can include a 30% tax on undisclosed foreign income, a 300% penalty on the tax amount, and a 10 lakh rupees penalty for simply failing to report foreign assets. And once your case escalates into deeper scrutiny, fixing it becomes far more difficult and far more costly. Here's what you should do right now. Quick checklist. If you got an alert, or even if you didn't but you have overseas links, review this. Foreign bank accounts, overseas property, stocks, RSUs, mutual funds or other investments abroad, income from dividends, interest, rent or capital gains. Then cross-check what's filled in Schedule FA and Schedule FSI in your ITR. If anything is missing or incorrect, correct it within the voluntary window. Bottom line, if you have overseas assets, this is the moment to double-check disclosures, especially before 31st of December 2025, because penalties for foreign non-disclosure can be steep. For more such personal finance explainers that protect your money and your compliance, like, share and subscribe to Business Standard.